There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. All right. Welcome once again to Hard Money. John Scholes, Darren Long here, ready to enlighten you once again this week about expanding your portfolio with hard assets in the form of silver and gold, physical silver and gold, and other hard assets as well. We got a lot to cover on the show this week. As always, Darren, I'll give you some contact information for those who are listening or watching this, your podcast, your video cast as well. 1-888-335-8645 is the way. And deltaharbor.com, harbor with a U, because this investment is all about you. That's how we roll on this show. Contrarian wealth building. What does that even mean? We'll get to that in a bit. Darren, I know you want to rip that apart and dissect it thoroughly throughout the next hour. But first, update, silver and gold. How are things, pal?
Well, John, another week and another movement in silver and gold, which was for us pretty good. It was a steady week, an average week, what we'd say was busy. Welcome aboard to all the new investors, by the way. I mean, we've had a lot of people reach out, especially through Sauga. This has been a tremendous opportunity for us to grow our brand and image, and a lot of people relating to this idea that we're going to discuss throughout this show of contrarian investing. Hey, I'm going to do something that not everybody else is doing right now, and these are the reasons why. So we're going to discuss it on today's show. And silver, as we tape the show, trading in at around 2605. Gold back above 1800. Big news for gold. During the week, gold advanced up to the 1810 to 1820 range, in fact, and silver pushed 2650, which was nice to see. Yeah. A breakout of sorts. And it could mean that we are approaching the very near end of what we have considered to be the summer doldrums, John. As we talked about on the show last week and the week before, summer doldrums. And again, I'll ask our producers to put a chart up for our podcast viewers. Summer doldrums are months during the year, usually in summer, in June in particular, in which the prices of silver and gold tend to be very good buying opportunities. And this fits hand in hand with our theme for today's show, which is contrarian investing. And the spring virus, moving into phase 1 and 2, was delayed, and it dented the Canadian GDP. So we had some problems there, and the reports are now out. A lot of data came out this week. GDP declined 0.3% in April, less than the 0.8% preliminary estimate a month ago. But weakness concentrated in industries impacted most by virus spread and containment measures. So, I mean, this is where we're at. Official preliminary estimates are for another 0.3% as the numbers come out for May, and some recovery to have begun last month, which we'll talk about throughout the show. But silver and gold, great, and a huge welcome aboard to our new clients, because this is obviously becoming kind of viral here on Sauga. We're excited. It's a big thing that's happening, and there's a lot of voices, a lot of people calling in, and we're excited to talk to each and every one of them.
And reaching out, by the way, anytime, as I give it out all the time, 1-888-335-8645, and Delta Harbour, harbor with a U, deltaharbor.com. Okay, as mentioned, the theme of the show, basically, Darren, this week, contrarian wealth building, contrarian investing. So break it down for us. What does it mean to you guys?
Well, basically, John, contrarian investing means to invest against the crowd. I mean, it's to go against the grain. It's the idea that if you're an investor, listen, not all of your portfolio has to be in contrarian assets or contrarian holdings. It's the essence of that idea, or that notion of contrarian wealth building, is to be skeptical of the general market, to do your own research and due diligence. It's an investing strategy that basically over time has historically proven good for those that have patience, those that have confidence with their money, rationality. You get a lot of high returns with contrarian investing when you're right. And it's a strategy that most of history's world-class investors have used, from the Warren Buffetts of the world to the Ray Dalios and many others have used to get really outsized gains. And the chart, and we'll put it up on the podcast again. Our production team will do that for us. But for those listening via radio, if I was to ask you what you think would be the largest earning annualized return by asset class over the last 20 years, what would you say? I mean, a lot of people are going to say, okay, stocks.
Yep.
Been great. I've had a great run in stocks. It's an easy pick, right? Well, they're not far off in terms of where stocks have been. S&P 500 over the last 20 years is an annualized return of around 6%. TSX, annualized return of around 4%. So, I mean, that's not bad. All things considered, listen, a lot of people will be very happy with 4% average, but they're not part of the big boys. Believe it or not, stocks are not part of those big boys. Contrarian investors making very simple decisions without buying and selling, without day trading, have performed best when they've owned over the last 20 years REITs, real estate investment trust, and gold and silver. Those are the three big performers, and people don't realize it. It's certainly not the mainstream average investor, nor the mainstream average planner or banker. They don't talk about it. When you go to your bank, nobody tells you, what about an ounce of gold today, Mr. and Mrs. Smith? Mr. and Mrs. Johnson, how about an ounce of silver? Been thinking about putting that in your portfolio. Nobody says about that. Nothing. They say nothing. No counterparty risk. Right? No third-party risk. You take it home with you. It's an asset, which means you have it there for other reasons, like we've talked about, insurance and the possibility of barter should all things break down. But again, the idea here is very simple. To be a good contrarian investor, you have to look at the market with common sense. And unfortunately, John, most people don't know that. So when you look at a chart like the one we put up on the screen, which our unfortunately radio listeners can't see, and you see gold and silver near the very top of what has been the best return fundamentally over the last 20 years, then you can't help but acknowledge that maybe I've been wrong about investing, okay? And I'll be the first to admit, prior to being in these markets, I didn't think about gold and silver as much as I should have, or contrarian investments in other hard assets or other asset categories. And the reason for this huge difference is primarily, why people make way more money being contrarian investors and in owning assets like gold and silver, is because investors consistently took money out of funds that were performing poorly or underperforming or recently underperforming, and they put them into funds that recently performed well. And it's the exact opposite of contrarian investing. It's what we do. It's human nature. And they're following success that has already occurred rather than identifying success that will likely happen in the near future. So they're moving away from underperforming sectors to ones that have already gone up in price. So they are consistently and constantly investing in market tops, removing their money from market bottoms. So they're doing the exact opposite of buying low and selling high. They're buying high and they're selling low. And honestly, John, in my experience, a mistake of this kind is literally the difference between a successful retirement plan and one that is very sparse, that forces you to go back to work into your 70s. This is contrarian investing. It's what it's all about. We're going to talk about an article later, and I'll set up the second segment. We got to take stock of where we are, really is what the next step should be. But legendary global investor John Templeton, which is a well-known, very wealthy investor in the U.S. marketplace, he once said that the best time to buy when there was maximum pessimism, and the best time to sell was when there was maximum optimism. So let's talk about gold and silver in that context when we come back, and just basically take stock of where we are.
Lots more to go, so stick around for it. Again, if you're tuning in on the podcast on YouTube, Delta Harbour's YouTube channel, you're going to see those charts. And by radio, just simply make a phone call and have a further discussion with Darren and the rest of the team. 1-888-335-8645, deltaharbor.com. We'll continue Hard Money right here on Sauga 960. All right, welcome back to Hard Money here, Sauga 960. And if you're watching the YouTube channel, welcome to you as well. You can reach out to Darren and his crew, any Tom, Rob, Roy, the rest of their team, ready for your phone calls, your emails, your chats, and enlighten you on this part of investing where your portfolio may not have traveled. And that would be hard assets like gold and silver. Physical assets is what we're talking about. 1-888-335-8645 anytime at deltaharbor.com. Okay, contrarian investing, Darren, that's what we're talking about. We hear that term all the time. But context means a lot in this type of discussion about wealth. And obviously, you at Delta and your team, I would assume, have a roadmap for this, right?
Well, we have sat on it for a long time. We've talked over the last few weeks about inflation and being ready for both inflation, deflation, although we side on the fence of inflation. We talked about gold and silver. And typically, John, everybody knows that typically, no matter what time of the cycle you buy gold and silver, it is a contrarian investment. Very few people actually own it. But again, with respect to contrarian investing, we have to take stock of where we've come from. So when I look at the big picture, I think back to pre-COVID, what was happening, what was going on. And about 5 or so months before COVID came along, Canada had an election. And we've forgotten this completely because obviously we're focused going forward. If you're liberal, you're looking at the handouts, you're looking at the party doing as much as they can, the spending, everything's well, looks great. There's a stock market potential boom going on with a lot of people talking about what could happen with the stock markets once money goes to the street level and flushes out. And then the real estate market, which took over in the last 12 months. I mean, it's been chaos, but there has been a roadmap there. Remember, it was Trudeau versus Scheer, and Trudeau becomes the prime minister without the popular vote. The Tories blow out Scheer and O'Toole takes over, which is now the leader of the federal Conservative Party. Now, the Greens, since then, they've lost Liz May. They're disintegrating. They have a weird new leader. And now we've had 2 years plus of a minority government. Once in a century pandemic has hit us, and a deep recession and some recovery in a federal deficit that was $19 billion in 2019, which in 2020 reached an astonishing $354 billion. So contrarian investors look at all facets of the marketplace and they make the best effort to pick the classes of investment which are typically strong performers, historically have a roadmap of having success, like gold and silver. But they have little or next to no love at the moment from investors. And so those are the types of assets they're going to add to their wealth strategy. And in order to really get a good sense of where we are, I just ask any investor that's listening to this that would hear us out on the idea of gold and silver ownership. Two assets which, by the way, since I've been in the market, since 2004, have averaged 10 to 12% per year, much higher than the 20-year annualized returns that chart showed. So ultimately, if we look at real estate, recency bias, FOMO, fear of missing out, low interest rates, they push this market to an extreme. Is it logical to assume that housing prices rise 50% from here? I don't think so. So again, we think basically because, and this is partly because it's our primary investment, we think that housing prices can never go down. But they will, and they can. Ask somebody who held real estate in the late 80s, early 90s in Canada, what happened to their holdings. They lost equity value, and they lost it fast. With foreclosures, a lot of people were left holding houses they couldn't afford. And right now, John, with the amount of climb in real estate over the last 12 months, about 90% of our population can no longer afford a house. 90%. That's an astonishing number, which nobody talks about. It's just, hey, listen, let's invest in balanced and diversified portfolios, and let's go on from here. But ultimately, in addition to real estate, as we said in the last segment, stock market has boomed. So we've had this, quick, deep recession last year, and then boom, right back out of it, and stock markets continue to go higher and higher and higher. Dow, NASDAQ, a whole bunch of them set all-time highs again, and that's in part because there's a lot of printed money going into those markets. But where do we stand? Are they built up on their own 2 feet right now? The answer is no. Insiders and company owners are the largest sellers over the last 12 months. They know that the market is come and gone. They may reinvest if we saw some miraculous recovery, but ultimately organic growth is dead at the moment, and it's printed growth. And that cycle runs its course. The second interest rates go higher, that's going to cause a collapse in real estate, and you're going to see a pullback in the stock market because, let's face it, individual investors are the last out, always. They're the first ones to get hurt. And so when we look at that whole picture, we look at marketplace and timing. Can we have a fresh start? Can there be, and prolong the onset of a recession? Well, anything's possible, but it's not likely. It's likely that we've come to the end of a cycle. We weathered the storm during last year's major drop in all asset classes. And the question is it possible for us to just rebound without difficulty and see real organic growth? The answer to that is no. And then if we look further into interest rates, we know those are about to kick up. We were at rock bottom interest rate values not too long ago. And, of course, that translates into mortgage rates, which have been historically low, ridiculously low. That's going to end. And as we said on last week's show, the central bank doesn't care about the fact that Joe Public is going to lose their house. They care about financial policy, about monetary policy. So when interest rates have to rise in order to quell inflation, which is currently ongoing, they will raise rates, and that ultimately will kill a market. And so that's coming down the pipe. And then, of course, as it relates to mortgage rates, as we said, about 90% of average buyers can no longer afford a bloody house. So contrarian investing is very important right now and makes complete sense. In addition to that, just this week, Wells Fargo announced that they're closing down all lines of credits, and they're getting out of that consumer lines of credits because they're fearful that people can't afford this. When they pull out those low interest rates, what happens? Can you afford to pay for your home debt when interest rates are at 4%, 5%? What does that do to your monthly payment if you've bought a $1.5 million home that you could barely afford to begin with and could only make payments maybe just above interest? What happens when interest rates go to 4 or 5%? I know the answer. You better be prepared, right? So the good contrarian investor has money to spend, who's in a good position. They're going to take care of themselves by owning good quality assets and looking at this concept of contrarian investing and starting to own assets like gold and silver when they're getting no love, when they're at a low, when things like silver are half the value they were at their previous all-time high of $52 set back in January of 1980. Heck, they're at just over half the value they were in 2011. So I like gold and silver right now. I think they're great contrarian investments. When we come back, though, John, let's talk a little bit more about some ominous signs and reasons why we can protect ourselves now. This is the great side of owning precious metals. We have a quality opportunity to be able to be in the right position at the right time with a little bit of brain power, to use common sense, a little bit of due diligence, get away from all that fear mongering, all those headlines, which we'll talk about later in the show, and make a good decision to own physical gold and silver, two assets which have made money, which have averaged 10 to 12% over the last 14, 15 years and continue to surprise us, but are yet still very undervalued assets.
And we'll dig down deeper on how exactly you attain these physical assets through Delta Harbour. We'll get to that. But first, the phone number and into a break. 1-888-335-8645 would be the way to call in, and online to deltaharbor.com. We'll continue. This is Hard Money on Sauga 960. Welcome back, Hard Money, and you want to reach out to Darren and his very capable crew anytime, if just for a chat. I haven't explored hard assets at any time or any time recently. Make that call and get educated, right? 1-888-335-8645, deltaharbor.com. Darren, you kind of alluded to it. Honestly, are we staring at a possible recession soon, or are we already into it? What do you think?
Well, I think last year, certainly we all felt a little bit deflated. The markets broke down, asset prices dropped, barrel of oil went negative. People were paying you to take the barrel of oil for a half hour of one day, a couple hours of one day. Some really strange things happened last year, John, but it's a great question. And I do believe that it's important to take sides. I said I feel that inflation is going to occur. It is. I said that we talked last week about the idea of inflation and deflation, which is still possible, stagflation still possible, but I also said I think inflation is the more likely outcome. I think right now there is going to be a short-term jump in valuations of the stock market coming into the tail end of the third quarter, start of the fourth quarter, maybe even early next year. I think that the central bankers are going to do everything in their power to keep money cheap, to keep it flowing so interest rates stay as low as possible. But that threat of inflation is a real big problem. So they're going to have to raise interest rates coming in the next year, and maybe as much as 7 to 8 times over the next couple of years, which puts us at 2 to 3% in federal lending rates. So again, with that on the horizon, do I believe that recession is possible? Yeah, I do. We're well past the point at which we should have seen an extended recession. That's unfortunate to say. I don't take any pride in saying it, but when the last election happened, the average national house price in Canada was around 500,000, just a little over 500,000. During the pandemic, that average house price crashed down to about 495 in that range. So it lost, 5 or 10,000 in average value. Well, we've certainly come a long way since then. And today that average price has gone to around 690,000. So in the span of 1 year, we've gone from an average house price of 500 to an average house price of 700,000, basically. And that increase in 1 year is around 35 to 40%. And, in a lot of places, mostly secondary markets, the jump has been even far more. On the outskirts of those big towns, the outskirts of Ontario, York region, and on the outskirts of Mississauga, on the outskirts of getting to Guelph and Cambridge and Kitchener, going up to Bradford and Barrie and Orillia and out to Oshawa and out to towards Kingston and that area, there have been huge booms in valuations. That's the first inkling that this cycle has to end, and it usually does end very poorly. But unfortunately, that's the situation we're in. It's led to anger, John. I hear it all the time from people we're talking to. It's disruptive. There's been generational warfare between the haves and the have-nots, the older and the younger, as those that can afford it look down upon those that are new to marriage or family or a new home. And there's a big class divide right now. So that situation is very disruptive. And on the one hand, you have a majority of families who have benefited from this escalation because the equity in their home has gone higher. But on the other hand, you have a huge cohort of younger people who are locked out. So household debt is inflated wildly because of it. And this is obviously because of these cheap rates that we talked about in the last segment, right? Thank you, COVID. I mean, obviously, if there's no real positive side to COVID, but it's kept money very cheap. And there's been a housing frenzy. So that has ultimately translated into a lot of divide especially in our province of Ontario. So yes, 100%, without any doubt, John, I believe this is heading towards recession, full stop. That's as clear as I can be. But I will preface that and suggest we witness a rebound of some sort, followed by a crash or some type of unfortunate black swan event. And I think the smartest money right now is leaving the stock market. That's the owners and the insiders' money. You can see it. Business owners and companies are selling their own stock. You don't have to be a whiz to see it. Just type it into Google and look for it. There are a million websites that will give that information to you. And assets such as gold and silver, they're becoming premium assets. Over the last year, we've heard about shortages. We've seen the price of silver jump last year overall over 40%. In the last 12 months, the price of silver has jumped near 70%. And right now, they remain contrarian investments for the very smart investor. And the idea is simple, John. Buy on the low, sell on the high. That's what it comes down to. All of this is where it's directing. So yes, full stop. I believe recession is imminent.
Yeah, 1-888-335-8645 to reach out to Darren and his team anytime, even as we do this show today. On top of all of that, we have other existing threats to contend with, which make this even more daunting, don't you think?
Yeah, lower than expected GDP levels. Listen, if we're supposed to have a rebound, we need GDP levels to be 3-4%, maybe higher, right? I don't think we're going to get up to the type of Chinese GDP levels that we saw in the early 2000s, mid 2000s, and into this decade. But ultimately, 4 to 6%, I mean, that tells me we're in a big boom, but we're not getting there anytime soon. We might have a quarter of it, because people want to get out of COVID. They want to go back to spending, back into the stores. They want to hustle out and spend that money that they so precariously dangled inside of their savings accounts, which is in Canada roughly $100 billion. But how much of that came from COVID payouts, handouts, CERB programs, all that stuff that built up over time? I mean, when you start to see kids that are 20, 21, 22 that make more money by staying at home and taking CERB payments, that's when our politicians left us hanging, because this is not a good situation to be in. And, we look at inflation, we look at oil prices, look at gas prices. Just now, after I've been talking about it forever, just now I have colleagues messaging me saying, holy cow, man, 136 a liter.
Yeah.
And I said, look, where were you when I was talking about this ages ago? This is cutting right into the heart of your pocket. This is your wealth being evaporated right before your eyes, and nobody cares. Got to be contrarian, John. You got to pick up assets that are undervalued. It's not the time, in my opinion. I'm not your financial planner or advisor, but in my opinion, you have to look at the big picture and see where the market is and what it's telling you. Put your ear to the ground and hear what is happening. Oil touches everything. There's no escaping it. It is going to absolutely be part of every delivery that you get for food, clothing, staple items. They all involve transport. If that transport becomes astronomically expensive to get there, and it will, then how can we survive on the same wage and the same income? Yeah. That's coming down the pipe. That's why I think recession is here. And there's a lot of reasons why it would be beneficial to hold gold and silver at this time. But I think we can no longer turn our backs to the economic concerns we face. I think there are challenges here we face moving forward. We got to talk about being contrarian. We have to have an open discussion. We have to be looking for things that are important to us, common sense, things that make us happy, good income, solid wealth strategies, being able to afford those nice luxury items down the road. Can we do that if we only hold stocks, if we only buy real estate right now with this FOMO attitude and this recency bias? Gold and silver are averaging 10 to 12% per year since 2002. And if we look at them as solid ways to bulk up our portfolio as contrarian investments, I think what you see going forward is going to be very delightful as an investor. It's a great way to take that extra bit of money you have saved or haven't spent and consider a way to diversify your wealth strategy.
Question coming up, though, are the politicians going to parachute in and save us? We'll talk about that after a short break. 1-888-335-8645. By the way, the number to reach out to Darren and his team, and online to Delta Harbour, Harbour with a U, deltaharbor.com. We'll continue. This is Hard Money on Sauga 960. Welcome back, Hard Money. Good to have you along on this show again this week. 1-888-335-8645. Anytime to reach out to Delta Harbour. Darren and his team are standing by to open up your eyes and expand your portfolio with hard assets in the form of gold and silver and other hard assets as well. Could be just an education at this point, but it will whet your appetite indeed. deltaharbor.com online where you want to go, and follow them to catch these YouTube videos every week as we update those with lots more education and information as well. So yeah, the question was before we left the break, Darren, what do you think? Politicians going to save us in this hectic world now, or what?
If we hit recession, no, they're not. They're not going to save us. The interest rates won't be able to go down because they're already low. The worst case scenario that could occur right now is for us to have some type of black swan event and a crash. Gold and silver prices would love it. They would rocket through the roof. You'd see gold go to 5,000 an ounce. I say that with utter confidence. I've seen it go from nothing to 2,000 an ounce and higher. Seen silver go from basically $4 an ounce in my time all the way to 49. And these moves don't surprise me at all. They're going to go much, much higher than that. But I don't believe politicians swoop in and save us. You know why, John? Because we're not too big to fail, right? We don't have a big, huge, expensive logo on the outside of our house that's an institutional logo or brand that needs to fall under the category of too big to fail. Will they bail out the banks? Sure, they'd bail out the banks. They'd bail out, all kinds of corporations, which they've done. When 2008-9 hit, what people don't know is that there were a lot of Canadian companies that took money from the federal government in the US, including our own banks, right? Little dirty secret. And nobody cares to know, really, because let's face it, John, at the end of the day, we're all about us. If I have to think about negative things, that brings no joy to my life. But sometimes investing is a difficult thing. It's not easy to make money. And if we're happy plugging away at 6 or 7%, then I'm happy for you. If we're happy plugging away at 2 or 3%, well, I'm concerned because I think you're losing purchasing power. I think that at the end of the day, no matter how hard you work, if your wealth strategy doesn't return to you a nice, consistent flow of income for the long term, you'll be working well into retirement. And we want to avoid that by owning assets that, although they're not dividend paying and I can't live in them and I can't eat them, because that's how a lot of people knock gold and silver by telling you those things. These are assets which have stood the test of time. They've been with us for thousands of years, John. And in the 70s, gold was $35 an ounce, and it culminated by the end of the decade under similar circumstances with the threat of inflation, high oil prices. In fact, peak oil was an argument back in the 70s. We had the threat of geopolitics, and we had uncertainty in money printing. Went from $35 to $850, and silver went from $2 to $52 over that same period of time. And most of that gain came in the last, year and a half, 2 years. So ultimately, somebody could have easily joined into the gold market, bought physical gold in 73, 74, and had left the market by 76, 77. They were disenchanted. And this is what happens with these types of assets. And contrarian investing dictates that you have to be patient. And we're going to talk about the 5 golden rules of contrarian investing in just a minute. But gold and silver, 10 to 12% average. Don't take my word for it. Look up a chart of gold and silver. You can see it for yourself. And there are a lot of dangers right now to be overweighted in one asset class like housing. Look at 1990s housing boom. It fell drastically once that boom ended. FOMO, that fear of missing out, recency bias, and now, debt to income ratios of 450% or greater. So this is a big concern. You've got to get involved and add to your portfolio some assets which are contrarian, which are not, in the mainstream right now, which nobody has love for.
I want to start with the phone number. It would be a great place to start, by the way, 1-888-335-8645 to reach Darren at deltaharbor.com. Well, you've set the table nicely, and it looks pretty good to sit down to. But how exactly do clients get started with Delta, Darren?
Well, first off, let's remind everybody listening, this is physical gold and silver. These are bars and coins. They're not collectibles or numismatics. We don't have any Pope sets or anything like that. We have pure bullion. This is all pure bullion. In gold, it's the purest. It's going to be 4 nines, and in silver, 3 nines or pure, which is the purest. And ultimately, to get started, it's not difficult. We have direct delivery, so you can just basically get connected with Delta and take it home. Anything over $1,000 a purchase is free shipping anywhere in Canada, so we got you covered that way. You've got the storage option. If you want to put gold and silver into a storage vault in your name with your serial numbers and be able to see it, touch it, handle it, all that good stuff, buy and sell by phone call, we've got you covered. If you want to put it into your TFSA, RSP, if you don't like what your registered accounts have done for you, we've got you covered. You can put gold and silver into your TFSAs and your RSPs, liras, your lifts, RIFs. You can even convert your RSP in gold and silver at the age of 70, 71, when the conversion happens into the LIF or RIF. Will help you through that as well. We have a great partner in Questrade that we use that gives our client an excellent dashboard. It's very easy to do, and it's physical gold bars and coins. And you can buy and sell that by phone, just like a stock. Very easy to do. We have a bulk bullion program. If you're not concerned about holding on to bars, you don't care about whether or not that's in your possession, maybe bulk bullion is for you. We're constantly buying and partnering with groups and to put bulk bullion, 1,000-ounce silver bars, 100-ounce silver bars, 10-ounce gold bars, kilo bars, 1-ounce bars, all kinds of product in gold and silver into the vaults in bulk, so that we can hold on to it and then allow clients to own part of that holding in your name, 1-to-1. There is no sharing. There's no hypothecation. Nobody else gets your ounce. Once it's taken and spoken for by you, you get it, but it does decrease your premiums. Right now, premiums for gold and silver are much higher than they have been in the last little while because the sleepy giant has awoken, and ultimately we are going to be able to see that bulk bullion can be great for those that really don't get too carried away with the idea of having to have that in their possession, don't want that unsafe environment at their home, or really don't want to store in a safe deposit box. So that's a great option. And if we want to extend that a step further, we can finance that bulk bullion. So if you have 1,000 ounces of silver and you bought it and you own it, you have the option of financing up to 80% of that. So you get 3,000 ounces into that account, which is a really good way to go if you want to maximize every single dollar you're putting into the market. We can talk about that as well. And John, when we come back, I want to not only talk more about contrarian investing, but An article in particular that touched on this very concept came out through Forbes this past week. We'll make it available to our newsletter subscribers, and it is Frank Holmes, who's the CEO of U.S. Global Investors, and what he had to say about contrarian investing. It's very interesting. And in addition to that, let's run down the 5 golden rules of contrarian investing, what to look for. How is it that I can get involved? What are the signs? How do I know it's a contrarian investment? Let's look for all those things, and that and much, much more on the show to come.
Love it. We'll stand by for that. We'll give you a phone number before we take our last break, before wrapping up with those important key elements. 1-888-335-8645 is a way to reach out by phone. DeltaHarbor.com, Harbor with a U, because this investment, of course, is all about you. And sign up for that newsletter, follow them, and watch the YouTube videos as well. Just search Delta Harbor on YouTube, and join and subscribe and like and comment as well. We'll continue Hard Money on Sauga 960. All right, welcome back. Let's get at it. Thank you for joining us this hour with Hard Money here on Sauga 960. If you're watching the YouTube channel, good to have you along as well. You can like and comment and subscribe and catch new videos all the time. Tons of information about investing in hard assets, gold and silver, and others. But you reach out to Darren and his team before you do that and have that conversation and get educated. 1-888-335-8645 and Delta Harbor, Harbor with you, deltaharbor.com. Okay, back to that Forbes article you mentioned, Darren. Let's get through that, and then we'll get to the 5 steps of contrarian investing. So a busy segment. So let's get at it, pal.
All right. Forbes came out this week with an article on contrarian investing. It's very timely. As I was writing up some notes for the show, I'm reading away as I do every week, and boom, this article comes out. It's written by Frank Holmes. He's the CEO and CIO of U.S. Global Investors. He's been fantastic. I've followed him along the way. I've even made a handful of investments based on his advice after doing my own due diligence. So very, very good voice in the community, understands a lot about what's happening in the marketplace. And he uses a quote from, maybe for some people will know this investor. I happen to know who John Templeton is, but he's a famous U.S. investor, and he had a simple quote, which I quoted earlier in the show, which was in this Forbes article. Legendary global investor John Templeton once said that the best time to buy was when there was maximum pessimism, and the best time to sell was when there was maximum optimism. And so the article goes on to say this type of contrarian investing takes great conviction and sometimes nerves of steel, but its practitioners, John Templeton included, can be rewarded handsomely. The trick is to find the opportunities. He goes on further to say, right now, I see gold as the ultimate contrarian investment. The yellow metal is largely unloved at the moment. It's set to notch its worst monthly slump since November 2016, and the 50-day moving average is threatening to fall below the 200-day moving average. And so ultimately, this article talks more about gold's relationship to the stock markets, and the NASDAQ in particular. And at certain times, that ratio between gold and stock markets gets very tight, and it takes very little gold to buy one share of that index. And at other times, it takes a lot of gold to buy part of that index. Right now, it takes a lot of gold to buy part of that index because gold is very undervalued. So from a ratio perspective, that historically has proven very successful for contrarian investors. And what this Forbes article goes on to talk about, in essence, is that ratio and relationship. It also points out that inflation is a great concern for them right now. And in particular, Frank mentions that he does believe this is going to be a period of inflation, unlike we've seen in the last 20 years, that we haven't experienced since perhaps as far back as the 1970s. Now, he didn't go as far to say there might be 10+% inflation, but if things go the way we think they're going to go, it is very possible we get very close to that. And if people think back to the 70s, especially listeners of this show, you can remember a time when mortgage rates were up near 20%, while bank savings rates were up 12, 13%. You put money in the bank, you're actually making money, but your cost of living was very high. So ultimately, this is on the heels of everything we've talked about today. We'll make this article available. But John, we want to talk about contrarian investing and close out the show with some simple rules.
Yeah, you've called them the 5 golden rules, no pun intended, but the 5 golden rules for contrarian investing. So let's hammer through them, pal. Number 1's what?
Well, there are 5 golden rules. Number 1 is when you read about it in the newspapers or see it on the news, it's already all over. Okay. That's the simple reality of what contrarian investors think. So if Uncle Pete gives you a phone call and says, I got a hot stock or I'm doing this, it's too late. 9 times out of 10, history tells us, data tells us it's too late. So right now, if you're sitting at home and you're thinking, geez, let's take this weekend, rain's going to stop, nice weather's coming, let's go take a peek at a house. Booming real estate prices. Look at this. We can't lose. This is a winning proposition. That market is come and gone. I'm not so sure it's such a winning proposition. That's only one example of it. But when you read about it in the newspapers or see it in the news, generally speaking, it's already too late. Remember, you don't hear about gold and silver in the news. That makes them an excellent contrarian investment for you to do your due diligence on. Number 2, buy when everyone wants to sell and sell when everyone wants to buy. Look at who is selling real estate right now. Now, undeveloped land is being held and hoarded. But if you look at residential homes, a lot of people who were real estate investors back when nobody cared in the early 2000s, when home prices were a lot less expensive, and they decided to hold on to these, maybe they were income generators for them, are now getting out of that market. And you're slowly starting to see the peak values of homes on the outskirts of Toronto and in the Toronto core itself slow down. Data is telling us that this market is coming to a slow end. We hope it'll be a soft landing. We love real estate and raw land as a hard asset development or ownership or investment, but ultimately you got to pay attention. Step number 3 or rule number 3, no one sees a bubble when their income depends on it. That's a golden rule. No one sees a bubble when their income depends on it. Time and time again, the market ignores bubbles because no one can afford for them to burst, right? Go into a bank and ask them about investing. They're going to give you 20,000 different things to invest in, and never once will they approach the topic of recession or that this could possibly go bad or wrong, or maybe you should offset this with some contrarian investments like gold and silver. Never. Because the bank's income depends on you being an investor, right? Real estate markets depend on you being an investor. So you're not going to hear real estate agents talk about the negative side or downside or the possible threat of recession or higher interest rates because their income would be hurt by that. So when we're blinded by bubbles, especially when we have recency bias and FOMO, we are way out to lunch sometimes on what our expectations is of a market. If you look at homes in particular, that's our largest single source of investment for the average Canadian. We get blinded by the fact that we think our home is worth so much money, our cottage, and we're seeing it now. So you got to be paying attention because no one sees a bubble when their income depends on it. That's rule number 3. Rule number 4, try not to take tips or advice and don't always believe research notes. I already indicated that when Uncle Pete calls up and says, I got a hot stock, do your due diligence. Read the statements of the company, understand it for yourself. And if you don't, find somebody who can help you. We are not your financial planners, advisors. We're experts in gold, silver, delivery, storage, and the acquisition of bullion for you as an investor. We are not here to tell you right from wrong or what's best for you. Opinions are like belly buttons. Everyone has one, right? Focus on your own research and form your own opinion. The market doesn't pay people to agree with each other or regurgitate someone else's ideas. It'll pay you to be right when not enough people see the real picture. That's gold and silver. That's buying undervalued assets when nobody else wants them, right? 1 or 2% of all globally managed assets own gold and silver right now or are exposed to gold and silver. That's nothing. So in the grand scheme of things, take a look at that picture and do not, whatever you do, my competitors in this space, Delta's competitors in the space of bullion, they fearmonger. They shoot out the world is ending tomorrow. They bring on the Salentes of the world, who are very colorful people who I love to talk with, but they bring them on all the time and they talk about how the world is going to end and all this stuff is going to be crazy, when in reality, they just need to have a little bit of common sense, right? Nobody's saying don't have a stock portfolio. Nobody's saying don't own bonds or have cash in the bank or own a collectible car or have real estate. We're just saying be balanced, right? And the 5th and final rule, What is obvious to you is not obvious to others, right? The world simply does not catch on fast to hidden options or undervalued assets. If you have a contrarian point of view, you are sure is right. Don't expect the world to hear angelic choirs and for there to be a sudden catharsis. If you're right, the predicted outcome will take a lot longer to happen than you expect. So allow a long time to happen when you're buying and owning these assets. So gold and silver are prime examples of that. Just simply look at your wealth. Are you happy? Are you satisfied? At the end of the day, this is about you and your family. And the ownership of gold and silver may be right for you. It may be wrong for you. You are the person who has to decide that. But when I'm looking down the barrel at what gold and silver have done for the families that have been part of Delta, I can't help but get excited. Moving forward, this could be among the best things that people have done to balance their wealth. And we look forward to helping and supporting people throughout the next, who knows, maybe even 20 years, John, if everything goes as planned.
A great show today, man. Lots of great information there. You want to reach out to Darren now that we are complete for another show. Really simple. 1-888-335-8645 would be the number. DeltaHarbor.com, Harbor with a U, because this investment is all about you. And of course, as I mentioned, this video cast, you can follow, subscribe, and comment on their YouTube channel as well. Just follow at Delta Harbor and do all that. And that's it for another week. Thanks for tuning in. This is Hard Money right here on Sauga 960.